Hello everybody, welcome in. Today's show is sponsored by miners. Only kidding. Just trying to make fun. This is a question I get a lot is, who is... Sorry, put that away. It's very dirty. Who is going to survive post-halving? What exactly is going to happen? And this is another detailed breakdown. There are some interesting twists and turns that are going to be impacting the miners in the next 24 hours, and that is the Bitcoin halving. So ready to jump in, everybody. We have a big one here. And again, I tried to get it out yesterday, but there's simply far too many numbers to punch through. So we're looking at over 8,000 data points, 26 ratios. Many of those ratios are ratios on other ratios. I will give you the inside scoop. So the other interesting thing happening right now, and some names like Marathon have been very open. They have a $6 billion market cap and a $1 billion war chest. And they have openly said they're going to use their financial position to maybe acquire some undercapitalized, struggling miners. We're going to look today to see exactly if we can identify who they are. And this is called Who Lives, Who Dies. And this is not financial advice, it's edutainment. And shout out to Patreon and the team behind me. This is from Clout Casino. I was literally doing the same research on Bitcoin miners that James and his team did, and I found one of his Bitcoin miner videos and stopped my research and just bought the Patreon. So thank you so much for coming in. Let's check out exactly where we are right now with Bitcoin. This is pertinent to where we go forward. First of all, there's a top and bottom indicator. We are still at yellow. We are nowhere near orange, dark orange, or red. So we've got plenty of time left in this market, despite all the people out there saying we've topped already. No, we haven't. It's just, why do people say such nonsense? Anyway, let's look at this one too. The miner hash rate, coincidentally, is up 863% since the last Bitcoin halving. Again, all this data is in our Tabby model, and that is kind of spectacular. Price is up, but you know what? Price is down below all-time highs, but the hash rate has literally exploded, and that's had a huge impact on the Bitcoin miners. Let's look at some very quick and dirty Bitcoin stats. Bitcoin market cap, forget about that. But the real thing I wanted to focus on is 19.686 million in circulation. Okay? And average daily Bitcoin mining revenue is $39.666 million. That's actually a little bit down from last time I did this a month ago. What's happening? Well, fees are actually up. These are the average Bitcoin fees. And we know tomorrow, the block reward. And when I say tomorrow, by the way, some people are asking me, is it not Saturday? No, tomorrow, Pacific Standard Time, where I am in the United States. If you're in Australia, it'll be Saturday when the Bitcoin halving happens. But this is Bitcoin transaction fees. And what's incredible, hey, thank you, Jimmy, the block reward will be cut to 3.125 Bitcoin. And that's going to have a big impact. Now, there is some new stuff happening, like there's Runes. It's a protocol developed by Casey Radamore, and Runes aims to facilitate new token trades on Bitcoin using a more efficient UTXO model. And a lot of people are excited about that, and that will help the BRC20 standard. There's also other things. OKX is working with Runes too, and that could really help bring a lot more fees to the Bitcoin miners, especially if they're not cut out. We have 3 brand new models, brand new financial exhibits I'm going to show you today. One of them will be touching on that very carefully. Now, fees versus block rewards, the big difference. Here we know things like S19s should remain profitable post-halving, and we'll break down all those different miners in a minute. But you can see here there has been that same spike in fees over the last month or so, as you can see here. So that's verified. But what's key here is the difference between the block reward and the actual fees. And as time goes on, Bitcoin miners will be more dependent on fees than block rewards, and that will help them survive and help them keep the network secure. Now, a quick little dive into Bitcoin fees. The bottom part, the purple part here, shows you the new subsidy, 3.125, beginning April 19th, which is tomorrow. And the other thing is transaction fees, on how a low priority transaction fee is about $16. A no priority is about 93 cents. Medium priority about $18, and a high priority $19.65. So if you happen to be shipping $1 billion across the planet in 10 minutes, splurge, spend the $19 to make sure it goes safe. Thank you, Linda, for coming. Now, first of 3 new exhibits today. This is a new ratio that I think is so critical for us to be aware of for our miners post-halving. And over the last year and a half, I've been focused very heavily on being very risk averse, focusing on miners with the most effectiveness, the most efficiency, with the best, most modern rigs, and the least amount of debt. And I've been hammering you all on that as well. So I'm much more partial to those miners that issue stock over debt. Now, the way to read this chart, this is the percentage of cash to debt. If you are below 1, that means you got more debt than cash, and I do not like that. So things like Sphere, Argo, Core Scientific, DigiHost, Hive, Hut, Mawson, Wolf, all are below this 1 line. I do not like that. That's a personal preference of mine. That's not how I would manage my business. I would feel very insecure having to make payroll and stuff with more debt than cash at any given time in this situation. Now, those that are in blue are kind of okay, and those that are in green are very, very safe. You'll see green is a bit of probably a poor choice of color, but the first one is CleanSpark at about, I think it's 14 ratio. The second one is Riot at about 40. And then the third one is Iris Energy at about 47 or 52, 57. I can't read. Green on green. Anyway, I will fix that chart later. But that's kind of one of the key things to look for. And that's baked into all the ratios that we analyze towards the end and create a composite score on. Now, miner production. Exhibit number 2. Brand new. This is, again, it's a bit of an eye chart. So I tried to add some little stars and squares and circles on some of the key miners. The one thing I want you to note first is the green circles and how they shot up and then they came crashing down. That is Marathon. Not sure exactly why, but that does give me concern right now. It's not good at this stage of the game to be coming down so hard. We know hash rate's going up. We know it's becoming more and more competitive to mine Bitcoin. And that's reflected that many of the miners here, the majority of them, their production is going down month over month. This is the month of March production. And these are the trends ever since January 2022 that we're going back to. And again, focus on the ones that are going down versus staying stable versus falling hard versus the only one that's going up, and that is in orange, and that is CleanSpark. It is bucking the trend of all the others. And by the way, you can see the biggest producers are Core Scientific, Marathon, and CleanSpark. They're kind of the big 3, but CleanSpark has the least amount of hash of the 3 of them. And that shows you how important it is to be very efficient and effective. A huge part of my focus as well when determining the best miners. Thank you so much, Cybert, and thank you for the miner video loving folk here. It's a bit of an acquired taste, but boy is it lucrative. Next we have from Blockware Solutions. This is the rig and the cost per kilowatt hour of electricity break-even prices. This chart I love because it shows you, like back in the old days, you could mine with an S9 or an S17, even an S19J. But now, depending on the price of electricity, for the S19J, which used to be a state-of-the-art rig, you need Bitcoin price to be high in order to make it worthwhile to mine with this asset. The more modern rigs, things like the S19K, S19XP, S21, you should be fine all the way up the line. But watch the older rigs, and that's why you may have a lot of miners that have a lot of hash. But when they're running old rigs and they're paying something like, I don't know, 6 cents, 8 cents in electricity, They simply can't do it. And that's probably some of the disruption we're seeing right now with things like Marathon and why the production has fallen down so heavily. Anyway, third new exhibit is the new Bitcoin break-even post-halving. Now, this shows you the profits or losses, and again, it's an approximation based on last quarter's data of how much the miners will make or lose with the Bitcoin price of 63,000. Coincidentally, let's check the Bitcoin price. While we're here, it's 63,600. So Bitcoin has gone up 600 in the past hour and a half since I put this together. But the key thing you got to take away here is with the Bitcoin price, where it is now, 63K, give or take $600, BitDeer is profitable. They make $790 for every Bitcoin they mine. CleanSpark make $4,193. Oh, by the way, sorry, post-halving, not today, tomorrow, how much they will make. That's what's key about this chart. They're already very profitable today, but tomorrow, everything changes. So tomorrow, BitDeer can make $790 for every Bitcoin they mine with the price of 62K. CleanSpark, $4,200. And TeraWolf, $2,984. Call it $3,000. I would not want to be Sphere or Mawson or Hut because they lose a lot. They need a much higher Bitcoin price. Basically, whatever number you see in red, add that to the price above, and that gets close to their Bitcoin price. Some of them need over $100,000 Bitcoin to be profitable mining today, unless something radical happens. This is probably the most important chart you will see. And again, it does vary quarter to quarter, but do your own research and check out those numbers. Next, who is HODLing? Jeff Hammer, welcome back, and thank you for your post earlier. Who's HODLing? So if you look here, the orange represents the amount of Bitcoin sold for the top miners, and the far left is Core Scientific, Marathon, CleanSpark, Riot, Cypher, TeraWolf, Iris, Bitfarms, Hut 8, Greenidge. And blue is the amount mined and held. You'll notice only 4 miners in the top 5 are HODLing hard. Marathon, they sold half. CleanSpark, they only sold 3 Bitcoin. They kept the rest. That is big. Riot Blockchain held everything. Cypher holding again, kind of like CleanSpark, holding 99%, 98% of what they mine, which is good. This is the time where you want to HODL. You don't want to HODL going into a bear market, but when the Bitcoin price goes from 30,000 all the way up to 70,000 in a short window of time, that's when you want to be holding as much as you can. So well done to these players. We'll see what happens. This is other verification that the top 5 miners did not sell much in Q1 2024 compared to other quarters. Again, green is Bitcoin mined, black is Bitcoin sold. And you'll see Q1 2024 is similar to Q1 2022. Other than that, it is very different. So that's why this desperation and all these rumored calls of Wall Street banks, etc., calling up miners, hey, you got any Bitcoin for sale? You know, go down the street, go to the corner, try score a little bit. If you can, things are going to get really desperate really soon. Okay? People think, oh, the Bitcoin halving is nothing. It's priced in. No, it is not. It's already desperate. We had the massive dumpage, 314,000 Bitcoin out of Grayscale in 67 days. And these miners, the big source of Bitcoin, they're not dumping. Madness. Now, who's selling hard? The firms that are selling a lot is Gryphon, 102% of their bag, which is more than they mined. Hut, 103% of their bag. Core Scientific, 108%. And DMGI, 144%. The rest literally need to sling everything that they make in order to literally keep the lights on. Now, this time is different news. I've been saying this time is different for a year and a half. It's kind of getting very tedious. But let me show you yet another chart that shows you this time is different. The total Bitcoin balance of miners has increased by 12,100 Bitcoin since the beginning of this year, and now is 217,000 Bitcoin. And this chart shows you with the arrows of behavior of miners, accumulation and distribution following the previous halvings. So you can see coming into typical halvings in the past, the miners dumped, the supply went down, they got rid of everything to prepare. This time, the miners are stacking hard, and that's going to put additional pressure on the whole price action, which is good for us as Bitcoin holders. This time is different. And by the way, this represents 3 halvings. It's never happened before like this. Now, rig utilization, another important metric. Shout out to power mining analysts and Compass Mining. You can see here how many of the rigs are utilized to what percentage. And basically, it's impossible to get to 100% because you're swapping rigs out, rigs are breaking, you're upgrading, you're moving things around, servicing, whatever else. So 97%, 98% is pretty much as high as you get. However, CleanSpark is at 96% here, BTBT 97%, Gryphon 97%, Sato, some of these names I'm not even familiar with, I don't even analyze, and then Hive 93%. But what is concerning is Bitfarms is at 86% and Marathon only at 63%. And that could explain why they are not producing as much Bitcoin, because they're not using their rigs. Next, let's jump into all of the numbers. These are the firms that we analyzed with their 52-week high and the current price and all that good stuff. And let's jump in. I'll go through this very fast. If you want to dig into some of the data, you can just hit pause in your video and write them down or whatever, take screenshots. I share everything. Now, first is the Bitcoin market cap versus miner market cap. This is a stat that I find interesting. I don't know if anybody else does. Let me know if you do. But last month I did this. The total crypto market, or the total market cap of the miners that I'm analyzing here, was $20.3 billion. And the Bitcoin market cap was 1.02 trillion. Look what happened in a month. The market cap of the miners I'm analyzing fell by $5 billion. And the crypto market cap went up by a third to 1.33 trillion. That is stunning. Stunning in a month. So the other data here is miners now make up these public miners that I'm analyzing here, which is only 20% of the global Bitcoin miners, maybe a 17%, make up 1.15% of the Bitcoin market cap. And a month ago, it was nearly 2%. That's how radical things change. Let's look at the performance over the last 365 days of the Bitcoin miners. The top performer over the last year, CleanSpark 488%, Wolf 127%, Bitfarms 96%, Marathon 73%, and Cypher 59%. We have some names that actually went down. Hut, Hive, etc. Riot have not done too well over the past year. But again, if you time, that's why I just take 1 year, simple time. Depending on when you buy certain assets, when things are beaten down, you can do well. I do hold a little bit of Riot. It's underwater from my entry, I think, but I'm not sure. I can't remember. I think cost base is around $10 or something. Anyway, now it's around 8 or 9. But the miners did have a good day today. Let's talk about the IA engine time. All the data, arrow down, lower is better. Arrow up, higher is better. Now, they're going to go through a whole bunch of ratios. Price to sales ratio, average 6.55. You want this to be as low as possible. 3 winners here are Mawson, Core Scientific, and Sphere. Now, because a miner may have a good ratio, it doesn't mean they're a good miner, okay? Because we look at so many. You can be very good in one area and terrible in another, but that's why you need to weight them very carefully. So please remember that as we go through this. Miner production, March 2024. Core Scientific, 906 Bitcoin. CleanSpark, 806. And Marathon, 772 Bitcoin. That's where the Marathon was eclipsed by CleanSpark for the first time. Riot, number 4, 425. Wolf, number 5, 379. And then it just goes down and down and down. So that's important. Now, current and future hash rate. One of the things I do like to look at is future hash growth. Play where the puck is going to be. A lot of these companies have spent a lot of time issuing shares, raising money, buying rigs, ordering rigs, locking in the most state-of-the-art, modern, efficient rigs to plug them in. this year before the end of the year. These are the future hash rates that will really matter post-halving. And you see the biggest growth. Marathon will go from 24.7 exahash today to 31.6. Core Scientific 19.3 to 19.3. They're flat. CleanSpark to go from 16.4 to 56. That is a tripling. And they came, when I started analyzing CleanSpark, they had like 3 exahash. Now they're 16.4. Riot have 12.4 going to 41. So a lot of big change. You do not necessarily want to be in a miner that is not growing their hash at least to the tune of 200%. It's kind of like my cutoff. They need to grow their hash. This is like a nuclear arms race. And it's not. It's very important to consider. It's not just these miners competing against each other. It's all the miners around the world that may be part of nation states using flare gas and other stuff to mine as well. The growth rate for this hash rate is also very important. The fastest growing hash plan. We're not saying they're going to execute it, but if they do execute their plan, that'll be CleanSpark, up 241.78%. Number 2, Riot, 228.96%. And number 3, Bitfarms, 223.2%. Fourth is Cypher, 155. And they got a whole bunch of names at the bottom that aren't planning to grow. If you're not growing, that's a bad omen, as far as I'm concerned. We could be wrong. We'll come back in a year and see if I'm right. This model has been pretty good, though, the last year and a half. Liabilities divided by market cap. Super, super important. I do not want a miner to have a lot of debt. The winner, CleanSpark, 0.01. That is the amount of liabilities divided by the actual market cap. DMGI, number 2, 5%. And Cypher, number 3, 7%. Iris, also 7%. Riot, 8%. And going down the line. And then you've got some names that are just, they literally have more liabilities than market cap. And needless to say, that's a scary place to be. Then you have market cap per exahash, another ratio I like. The winner is Mawson, Sphere, and Core Scientific. They have weak market caps, but a lot of future hash. We'll see how it pans out. The losers at the bottom, Marathon and HUT, do very badly on this, and therefore I don't like it. You see CleanSpark is about 65k, Marathon 127,000. Not good, and HUT 133,000. Then you have IA Miner production over hash, the amount of efficiency. So if you look at how much they actually produce divided by their actual hash on a monthly basis, 6.19%. The winner for Iris Energy. Number 2 is Hive, 5.82%. BTBT, number 3, 5.4%. DigiHost, 5.36, called it 5.4 as well, almost joint tie of 4th. Sphere, 5%, and CleanSpark, 4.91%. And then you go down the line again. Bottom, Riot, Marathon, Mawson, not doing too well here at all. Remember, Bitcoin mining is an absolutely cutthroat business, but the gains are incredible if you can pick the winner. Now, Bitcoin HODL bag versus HODL as a percentage of market cap. The Bitcoin held by miners, it really has to be taken as a function of how much market cap they have. And so I create a ratio on the right. The winner here is HUT. 59.42% of their market cap is made up of Bitcoin. Thank you, Clint, up there in Canada. Hive, nearly 40%. DMGI, 33.5%. And Marathon, 27.21%. Marathon have a monster bag of 17,381 Bitcoin. I wonder, and then down the line you see CleanSpark have been stacking hard as well. They're not selling. 5,021 Bitcoin. Most of that was accumulated in Q1, by the way, which is insane. And also it's a good time to be stacking and holding as the price is going up, not down. Now, what's going to happen? I wonder, will there be mergers and acquisitions for Bitcoin in this fiscal? We'll see. That'll be interesting. Now, we're at the end of the ratio. This is a summary of some of the key ratios that I focus on. And you'll see here, across all the miners, all of the things like Bitcoin held value, EV over future hash, Bitcoin held over market cap over future hash, production hash, EBITDA margin, liability over market cap, production ROI, price to sales in there, future hash growth, cash to debt, all these key ratios are all in there. There's 26 of them, and we create a composite score of them all. But first, we have just an average score. If you take every one of these 26 and weight them equally, 4% each, you get the following. Now, before we jump into the final result, this space is a moving target. Every day, every hour, every time a stock price changes, a market cap changes, every time a hash changes, every time a production changes, everything changes. So bear this in mind. Now, this is the new IA composite score with equal weightings. And the winner, top of the sheet, is Riot, 631%. Number 2, CleanSpark. Number 3 is Marathon. Number 4 is HUT. Now, that is if you take all of these 26 ratios and you weigh them equally. But that's not what I do, because I weigh what I believe to be most important, and then you get this result. And again, everything is measured equally with the same data, and it's all automatically fed into this big machine that the dev team built for me, so a huge thank you to them as well. This is the score with my loaded rankings, April 18th, 2024. CleanSpark, 85%. Riot, number 2, 80%. Cypher, number 3, 69%. Bitfarms, number 4, 68%. And Hive, number 5, 67%. But again, depending on what you are concerned about, what you focus on, will determine exactly where we go. So, real quick, CleanSpark is the winner again. Second place is Riot. And third place is Cypher, back in the mix. Now, there was a time a few months ago where I discovered something with the financials in Cypher. They were running really low on cash. They have fixed the cash problem. I don't know what type of anomaly it was, but it was very concerning. But they are back in third place. And hope you like the video. Again, take all the data, add your weightings the way you want, and determine which miner you invest in. Thank you so much for being here. Hope you enjoy the show. It'll be very interesting to see what happens to these miners in about a month's time. Depending on where things are. Normally I do this every month because it takes a month to get kind of the data around how much Bitcoin each miner is mining and stuff like that. And financials don't get updated till every quarter. Sometimes quarters are out of sync. But I will try do this again in May. So in about 2 to 3 to 4 weeks, once I get all the data, I will bring this out and we'll see exactly what changes. But I do expect some of the miners to start doing really well, especially after Q1 earnings. And we're going to see the type of money they're making from the fees. It's going to be insane. Thank you all for coming. Hit the like on the way out. I know this is a very acquired taste video, but it's also the most comprehensive miner video you'll ever find on the interweb. Thank you all. Have a good night.